Everybody, welcome to this week's None of Our Businesses YouTube show and podcast, where we discuss the weekly business news from an accountant's perspective. I'm here with my Westward Whiskey, and with me, as always, is AJ Wheeler.
Hello.
And Charlie Zigman.
Hi, everybody.
And we're gonna. It's a warm day today, warmer than it's been all week. So I've got my fan on blowing straight at me. So if my hair starts going crazy this way, you'll know what's going on.
Mine too. I'm just I'm a little more aerodynamic. Probably run faster.
Well, let's do it, guys. Who's got the first article?
Charlie, kick it off.
All right, cool. Yeah, I can get us started. So I got an article from CNBC entitled "The U.S. and China Both Topple in the Rankings of the Best Places to Work and Do Business." And so it's talking about how there is a study that was put together that looks at a bunch of different factors in each of the countries, like economic stability. Let's see, it was put together by the Institute for Management Development. And basically what happened is that they go through and they do, they take a bunch of things that they can look at objectively on their own. And then they also do surveys with executives in each of these countries about what they feel like working in that country. And so basically US was ranked number 10 in this study, and China was ranked number 20, and Singapore was actually ranked number 1. The research was done prior to the coronavirus, but the article talks about how the country's responses to coronavirus are telling of what the report was already finding. And so I guess I want to get you guys' take on whether or not you feel like that fits with your worldview of sort of where the U.S. stands in terms of best place to work in the country or in the world.
Well, and when they say best place, they say best place to do business and be competitive. So like best place to be in the business. It's not like work-life balance, right? That's not really what they're getting at. They're getting at best place to get business done kind of thing. That's the nature of it.
Yeah, it looks like the 4 factors that they looked at were economic performance, government efficiency, business efficiency, and infrastructure.
And so I think what might be surprising about it wasn't too surprising to me because I had heard an article about this phenomenon, or I heard about this phenomena in a different article. But when you look at some of the top countries on that list ahead of the United States, Denmark, Sweden, Norway, these Nordic countries, which are known to be more socialist in their economies in comparison to the U.S., it's kind of an interesting dynamic there, right? It's like that. I think that part probably is counterintuitive in terms of how exactly does that work? And it's not, on the flip side though, it's not like being socialist automatically puts you at the top, because you've got Hong Kong there, which is traditionally like ruthlessly capitalist. So it's and then you've got Canada on there that's also thought of to be more socialist in its economic policies than the United States. So I think that's an interesting dynamic, that in terms of places to do business, these countries that are thought to be more socialist and their economies are actually ranking higher than the U.S.
I'm also wondering how much supply chain plays into this. I know for like tech, and I was listening to Linus Tech Tips when the whole pandemic went down, and he was basically saying, like, if you have to buy computer parts, buy them now, because the supply chain and raw materials all come out of like basically the East, or China and kind of India and those places. And that, so I'm wondering how much, if they're talking about competitive places, I'm wondering how much supply chain feeds into like the UAE and the Hong Kong kind of Singapore area to make it more attractive in that sense, since so much of what's made these days is tech related.
Yeah, totally. And it talked about, political instability being one of the factors. And I think we're finding that as we've seen all of these trade dramas with international, countries having trouble trying to find terms that work for both countries. And so I think the article was spot on about what some of the challenges that the U.S. faces are. And so, I just thought it would be interesting to kind of talk about.
I almost included an article this week related to, I guess, the international tax. I guess they're at a negotiating table right now, and the U.S. has walked away from it for tax treaties And so, yeah, I think you're absolutely right. And they're, of course, tariffs are on the table, I guess, if they start taxing these big tech companies overseas, is what the U.S. stance was on it. But and I didn't find it surprising with the kind of track record that the current administration has with tariffs and stuff like that, or the kind of, I guess, governmental things that they've done tariff-wise in trade war kind of things. So it was interesting. And the reason I didn't include it is because it's still in a negotiation phase, and I don't know that we would have much to talk about it.
Yeah, that one's really tricky because, I mean, so many things go into the taxation of international things. But I know that one of the challenges they've been having lately is trying to have a good definition of what nexus really is and how to establish when a company or a company should be paying taxes to a certain country that it maybe operates in but doesn't have physical presence in. And it just seems like one of those things where the laws are behind the times and, are subject to change as we go along, because the world is, the commerce is changing, I guess is what I would say.
There was a similar story to that when airplanes were first invented, and some guy was mad that airplanes were flying over his house. And so he filed that his property line extended to infinity above his house. And this was, laws not catching up with technology back then. And in fact, they had to make a court ruling that your property only extends so far into the air. And so that these airlines have the free right of usage of air passage. So it's kind of an interesting landmark case where the law had to catch up with the technology that was around. And I think we see the same thing happening. The way that I heard about it was in a Larry Lessig book about copyright and how digital copyrights are kind of, the copyright law is outdated. But I think the same holds true for these technology taxation things, where when the tax law was written, you were thinking of physical locations or physical goods being sold. Now you're talking about almost like an intangible where you have a nexus that's creating money for you worldwide. How do you tax that? So it's an interesting question, I think.
Yeah, totally. So I've got another article we can talk about just to keep it moving. I've got an article from BBC entitled California Utility PG&E pleads guilty to 84 wildfire deaths. And so this is going back to those fires that we had in Paradise, California recently. And so basically what happened, I'm sure most people know, but just for those who don't, some faulty PG&E equipment led to a fire that eventually spread to a large area in which there were a bunch of people who were either maybe elderly or disabled, or even just, of course, totally healthy people as well. But it claimed a lot of different lives, and it was the deadliest U.S. corporate crime ever successfully prosecuted. And so what has happened is that they've actually pled guilty to their role in it, saying, yes, our faulty equipment caused this to happen. And so they've paid out billions in settlements and whatnot, but they're going to be coming up on sentencing for that in the next couple of months. And I guess I wanted to bring it up as an article because you don't hear, you hear a lot about corporate wrongdoing in certain ways, but you never hear it related back to physical health or safety. Usually when you hear about corporate wrongdoing, it's somebody bypassing a law or something like that, or some kind of financial scheme. And so I just thought it was interesting to see this totally different level of criminal corporate activity being, tried and sentenced. And so I wanted to get your guys' opinion on whether or not you felt like corporate wrongdoing in the US is treated with, fairly in relation to the people who are, people who go to jail for similar crimes. I guess I'm wondering if you feel US handles that.
Well, what I found was the disparity between the fine that it has to pay and then the civil suits against it. So the fine it had to pay was like 3.5 million and then 500 grand for the cost of the investigation. But then later on in the article, it says that this is already after it's settled more than 25 billion in claims from insurers and local government agencies, and another 13.5 billion with fire victims. And so I guess the agreements are expected to pave the firm's exit from its 2019 bankruptcy filing. I mean, yeah, that's a lot of money, I guess. And I don't know how you recover as a public utility from that. Just looking at the business side, not the human capital that was lost in this horrific fire due to faulty, equipment. So
And honestly, like one of the other interesting things was that they had said in the article that it was going to continue the unpopular power cuts during dangerous weather that it began last year. So one of the things they're under fire for is doing that. And you're talking about how are they going to recover from this financially? Well, it feels like doing that isn't going to be the right answer to cut everyone's power off during these trying times. This is also the same company that was the subject of the movie Aaron Brockovich and was, famous for all of those trials and tribulations. And so, yeah, I think it's really interesting. They were somehow able to survive that. They're the largest utility in the United States. So I suppose that'll have something to do with it.
Yeah, I'm just kind of speechless, and I don't know what to think about it, right? It's like you convict a company of killing people, and the only thing you can do is assess a monetary damage, and you can't put a company in jail, and so then, as AJ said, I mean, the actual penalties are really kind of minuscule compared to what they actually will owe on civil suits to individual plaintiffs, or perhaps if there's some kind of class action thing on this. I mean, I would think, it makes me wonder, like, what's the value of even convicting them on this? But I would assume the value is that it maybe helps the civil cases to some extent to have them acknowledge their wrongdoing in a criminal court like this, and maybe that's where the real value of the government getting this conviction is.
And I think from I guess a personal standpoint, I would like to see more of like a demand on safety inspections or something like that would kind of prevent this. Like if the punitive damages aren't going to cover it, then have them under some kind of regulatory punishment or increased kind of scrutiny for their equipment, I would think.
I was just going to say something very similar to that. I agree with that 100%, because the thing is, nobody wants to lose that utility, right? Nobody wants to see PG&E go bankrupt. They just want it to do all the right things to be safe. And so it seems like if there is any purpose to these kinds of cases, it should be geared at making that utility able to be safe, in the long haul. And so it seems like these things where it, agrees to continue doing things that caused problems in the past should be part of what is fixed with the settlement. And I'm just not sure that it is.
All right. So our next article actually is Walmart has partnered with Shopify to expand web marketplace business. Now, I thought this was surprising because, Walmart's always there kind of as like Amazon's second, stepbrother or something as far as like sales go. And I already thought they had a pretty strong e-commerce business. I mean, I've shopped on Walmart.com before for things, but I guess this is the numbers are staggering. So they want to scale. The reason why they're doing this, it's a collaboration, is their latest attempt to expand the scale and profitability of its $21.5 billion U.S. e-commerce business, and they say it's gaining ground on Amazon. So I'm just wondering, do you think like this partnership will put any dent in Amazon's kind of reach? Or do you think like Amazon's too big a machine to make a dent into? Walmart is into selling physical goods, and I realize Amazon is much more diverse in that way. But I think when people think of consumer goods bought on or e-commerce itself, kind of Amazon is the gold standard. Everybody else is kind of trying to catch up. So I'd kind of like to get your guys' take on it.
Yeah, I mean, to your point, AJ, I didn't actually even know. I've never even thought about going to Walmart.com to shop for something. So, I think that's interesting. I mean, I'm not indicative of the average online shopper. I mean, I just got into Amazon a couple of years ago myself anyway. So, but yeah, I mean, I think, I assume this is about that. This is about kind of making that play to people who think of brands that are online, and that perhaps Shopify has thought more of being online than Walmart is, and that's part of why they're making this play.
I'm going to say, like, just from my perspective, I think one of the things, I guess there's a lot of things I could say about this, but one of the things is that I think the big difference, both of them have the infrastructure to be able to handle that type of volume and whatnot. So I think Walmart is a good competitor to Amazon in that perspective when it comes to infrastructure. But I think the one thing that really sets Amazon apart and that I don't feel like Walmart has caught up to is the technology side of things, about making the process easy so that everybody can use their site in a way that just makes it easy. I think that's both on the customer side, but also on the sales side, because I know that from my experience, when our development team had, for a company that I've worked with who sells on Amazon, when they've looked at other sites, because there are a lot of different sites that do something similar to Amazon, what we've consistently found is that other sites either don't handle the scale well, or they have intricacies that just don't function the way that they would on Amazon. And so it's been a big game of like trying to get our process to work on those sites, and it just often doesn't. And so I'm not sure that I feel like Walmart has caught up in that area. But other than that, from fulfillment, I think it has the ability to. I know it said in the article that they were going to allow people to return items back to Walmart locations, and that's a great example of something that I think Walmart would be able to compete on because they have so many of those locations. The only other thing I think that positions Walmart to be a good competitor with Amazon is that they're both notorious for being heavy-handed when it comes to how they deal with vendors. And so I can imagine Walmart being good at having a marketplace by keeping all of their vendors in line. I know they've long been famous for their practice of basically managing their vendors to the point that it's often detrimental to the vendor. But yeah, I can just see that being a reason for their success.
Well, and I wonder if competition will push them to be nicer or more equitable to their smaller partners in the selling. Because I think, there's two ways to go, right? You either regulate them out of that, or I think competition drives, if somebody else is treating you better or giving you a better slice of the pie, then I think that helps. So I don't view this as a bad thing that I think Walmart is expanding their services and offerings to smaller businesses with Shopify. I think it'll benefit everybody, hopefully, for it to happen.
All right, so I've got another article we can go over. It looks like there was an article in CNN entitled 24-Hour Fitness Files for Bankruptcy and Closes 100 Gyms. And so obviously we're still in the wake of coronavirus, and the world is kind of changing to its new normal, which is that phrase you hear all the time and just hate. But yeah, this has been a gym that's been around forever. It's a gym that I've personally gone to for a long time, and I know other team members on here have been to that gym for years too. And so it looks like what they're going to do is they're doing a restructuring bankruptcy, a Chapter 11, and they're going to close. It looks like they closed 100 of their 400 locations. They're going to salvage some of the clubs and emerge as a smaller chain under a different brand. And the CEO chalks it up to COVID as far as the reason why this is happening, and I think that's very true, but I think there's also other factors. Like I've noticed that Planet Fitness and the article also mentioned Orange Theory, but some of these other gyms have found different models with cheaper fees. And the other thing that I've heard a lot about is 24-Hour Fitness is getting a lot of backlash about not canceling people's subscriptions when the whole COVID thing happened. And so I think their play to emerge as a different brand name partially comes from the fact that they have sullied their brand by basically messing around with their clients and not letting them cancel even when the gyms were closed. And so I want to get you guys' take on it. Yeah, what do you think?
Well, I think, just as somebody that has priced gyms before and goes to a gym but post-pandemic pretty regularly, that 24-hour fitness was kind of seen as like, the Cadillac, I guess, of gyms as far as like their branding goes and how their brand was situated. And so, and like you mentioned, Planet Fitness or Crunch or any of those other like $20 a month memberships that you could get, I think really took a dent out of their sales. Like if you look maybe 15 years ago, there were the only fitness clubs around kind of were those $60 a month or more kind of all-inclusive 24-hour fitness or whatever they were. And then you saw the surge of kind of the $20 a month membership, pay-as-you-go kind of model. So I don't know, and then to your point, Charlie, I don't think that they've made a change in the last few years to try and change that brand image or kind of keep up with the competition. They kind of rested on the fact that they had very nice facilities, a brand name that kind of oozed, a higher echelon type of clientele. But I think, and almost seen like a luxury brand, if you want to use that word in the fitness area. But I think you can see that those luxury, they probably have, the brand behind it. Then probably people perceive that paying a higher price now, and especially when all the gyms were shut down. I can see why I think they probably lost a large portion of their membership because of that, I guess. Even if they, without, not issuing refunds, I think probably you would see a pullback on those numbers just due to the fact that I think everybody's much more price conscious now.
Well, I don't go to the gym, as many can probably ascertain by watching me. But I actually used to go to a 24-hour fitness downtown. Actually, I remember I used to live downtown Portland. There were a couple in the downtown area, and I don't know which ones are ended up getting closed, but there are a couple that have been there for a long time, one that had been there forever that I would go to regularly. And then because we live downtown, my wife and I would be like our group Saturday morning activity would be go to what was the new 24-hour fitness in what they call the Pearl District in the Portland area when that first opened. And that, when you talk about that one was really snazzy and fixed up. The other one that we went to regularly, I never really thought of as kind of a luxury location, but the one in the Pearl District was like this really cool hip new location, and it was quite fun. So I don't even have any perspective on the fees or anything like that and how it compares with the rest of the market. But I would note that the kind of bankruptcy that they're talking about is one in which they can survive. They're shutting down some locations, but their long-term viability is still a longer story, and I think they're pretty prevalent. So since you guys like them, let's hope they carry on.
No, I didn't say I like them. I went there.
I subscribe to another gym that's $20 a month. I'm a cheap bastard. I'm an accountant, for Christ's sake.
All right. Well, see, that's the part that's confusing to me, because I feel like a long time ago when I actually would go to the gym, I feel like the 24-hour fitness subscription plan was really not very expensive at the time. But maybe it changes over the years in terms of where they sit competitively in the market.
I think the last time, and this was probably like 15 years ago or something, when I looked at a membership at 24-hour fitness, it was like $70 a month, I think. So I don't know. Compared to like $20 a month, but that was like the one you could use any 24-hour fitness. And
maybe that's what it is. Maybe I got a cheaper version because I was only using one location or something.
Yeah, 24-hour fitness is kind of, I don't want to say famous for that, but it's kind of funny to me that they make all these plans where they have little ways of inconveniencing you to get the price down. But I did the real smart thing, which is to just buy all the gym equipment, set it all up in your garage, and then instead of not going to the gym, you just sort of don't use those things in the garage, and then that's fine too. And I haven't, it's been a lot of savings.
That's right, yeah. It's a one-time cost to not use the equipment as opposed to an ongoing subscription.
No problem. I look at them all the time and feel sad, but other than that, it's fine.
Yeah. Well, it's like the treadmill, right? That gets used as the clean laundry holder, and I want you to know, every time I think of 24-hour fitness, I think of the "This Is America" meme. Have you guys seen this? Where I'll show you really quick. This is America, where there's a 24-hour fitness with stairs in front of it, but people are using the escalator. So here it is. 24-hour fitness, and everybody's running up the escalator instead of using the stairs.
Classic.
Yeah. All right, I got our next article here. So in our weekly update to the PPP loan, we have a couple kind of updates on the PPP loan. The first one is the SBA released, of course, this one was coming, the new EZ PPP loan forgiveness application. And so I think for our listeners to be able to use this EZ kind of application, when you're filling out your forgiveness form, you have to be eligible. So are you self-employed and have no employees? Did not reduce salaries or wages for your employees more than 25%, or experience reductions of business activity as a result of COVID that did not reduce the salary or wages of their employees more than 25%. So if you meet those three small, very narrow criteria, you can use the forgiveness EZ form. And so what it does is it shrinks down, this is great, shrinks down the 4-page application to 2 pages, and you have to enter less information and provide less backup. So in basically a surprise to nobody, I don't think it saves that much time, to be honest, but I think it cuts the calculation for your forgiveness. And then in the second part of this, actually, as of yesterday, I think there is a bill in Congress right now that would offer struggling businesses a second PPP loan for additional funding related around the PPP loan kind of amount that's left over that people have not tapped into yet. So I'd just like to get your guys' take on the EZ application, and if there's any surprises there, or the new kind of the bill that's in Congress to allow a second round of PPP loan funding for people that have already had it.
Well, I think the EZ application, the thing that strikes me is I don't quite understand the logistics or the context of it from the standpoint of I thought we would be applying for forgiveness through our banks anyway. I know there's information that gets submitted to the SBA, but like the article, and the SBA keeps coming out with this stuff as if you're submitting a form directly to the SBA, and I don't think that's exactly how it's working. But I guess I'm a little bit behind, because I think some people are now they may now be submitting for forgiveness at this point with their banks, and so there's other people out there who may know more than I do about it. But yeah, that was the only thing that was kind of weird to me. It was like, well, it's not like you fill this form out and send it into the SBA, as far as I know. You'd be filling this form out as part of a package that you're sending to your bank in any case.
I think it's probably just denoting what the bank's going to have to submit to the SBA. So it may be that you qualify for the EZ, but your bank is like, nah, give us the full forgiveness form anyway.
Exactly. That's what I was thinking, is that like the bank may want to streamline their process and be like, F that. We're not going to do 2 different processes. We're going to make everyone go through the same thing because it's easier for us. And so, yeah, the fact that the SBA has this shorter process becomes meaningless because you got to go through your bank anyway.
Yeah, I mean, the good thing about this whole thing, though, is that I think it definitely makes sense that any funds that were allocated to the PPP should be used. And so if they have funds left over that weren't used in the first round of funding, then it seems obvious to me that, yeah, we got to set up something to get those, funds in use, or it defeats the purpose of that legislation. And then the other thing is that I do think it makes sense to have a form that is simplified so that they can focus their audit efforts on the companies that need it the most, basically the ones who got the most money or didn't follow the conditions of the loan as easily. And so, yeah, I think anything that makes them able to administer it more easily and cheaper is ultimately for the best of everyone.
All right. Good. Charlie's playing it straight for us here. That's right. Yeah. Giving us the logical answer as opposed to the passionate.
I guess Charlie's planning on running for office at some time, because that was a very apolitical kind of right down the middle stance.
This message has been brought to you by the PPP loan, and I am getting a stipend for saying that. So if we could just please make sure this gets into the podcast, that would be great.
Charlie's a shill now for the SBA, just FYI. No, I think the point though is that they're making, to Ty's point, I think they're making these proclamations, the SBA, and I think it's true. The onus lies with the bank that's going to submit your application, or is going to take your forgiveness. And I think what's lost here is really the major twist in all of this relies or spins around nonprofits that have governmental loans that cover payroll, and they consider that as double dipping. And that has been, as far as I can see, that hasn't been addressed or stipulated in any of these rulings. So it's kind of out there up in the air for these nonprofits on which wages are acceptable to claim for forgiveness and which wages are exempt from that application. And so I've yet to see, and if somebody knows, please leave it in a comment, because I have clients asking all the time what the clarification is on that, and I don't think we have one yet.
Talk about a good problem to have, though. Like, which governmental free money program should I be using? Is it this one or is it the other one? Sounds great. I love that.
Charlie, I can tell you never done nonprofit accounting, because admin allocation, let me tell you.
Nope.
So all my nonprofits out there, we feel you.
I get upset every time I hear a little bit about it. And so just share. Yeah. All right. So I got one more thing we could talk about. I don't know if you have another one, but this is not an article. It's actually a website called blackshoals.net, and that's SHOALS. And what it is it's an art project, actually, that is a stock market planetarium. It's a little bit old. It's been around for a lot of different years. But basically the idea was that some people sat down and said, okay, we want to make this display that we're going to put next to the stock exchange in London. And the idea is that when stock traders go on their lunch, they can sit there and watch this planetarium. And what we'll do is we'll feed in real-time stock data through an API that will then lead to changes in how the planetarium displays the stars. And so the idea would be that you could look and see trades happening throughout the world, and you could see a sector that was booming with visual representation. And of course, it's very artsy and a little bit, I don't want to say silly, but I guess I want to get your guys' perspective on whether or not you think these types of creative data visualizations are more just fun to look at, or whether or not they're actually useful in understanding what's happening in the market, because that's a whole different approach to looking at stock data. So yeah, what do you guys think?
I think it depends on how that information is parsed. I mean, I think we've all been through that kind of simulation where they show you, 3 different graphs, and they probably all represent the same thing. But in one, it looks like, it's doing horrible. The other one, it looks like it's doing okay. And the other one looks like it's skyrocketing or something like that. And the variables have been changed on the X or Y axis to kind of represent a different feel for it or whatever. And we've covered in the past broadcast how, when the WeWork financials were given, or the prospective, and they kind of made it seem like everything's going to go up once we get, EBITDA is just going to fly off the chart. And at the very bottom in small text, it's like, this is theoretical, of course. So I'm kind of, I guess, and as an accountant, I'm more of a hard numbers and dollars and cents kind of guy, and kind of, less is more. If I can see a 2-dimensional graph of revenue over time or expenses over time, or some kind of ratio that I know what it means, I think that means much more to me. But maybe as accountants, we're blind to the fact that maybe people process information in a different way, and this could be advantageous for somebody to see. That being said, though, we're talking about stocks, and you're talking about it was created so that stock traders can see this on their lunch hour. I'm wondering how much that then plays into how they trade, or what they're doing after their lunch hour. If they see if somebody makes a move on pharmaceuticals or something, if the art project would have some real world implication of investment strategy or something like that. So I guess I would be interested to see the outcome based on, them seeing it at lunch, and maybe tracking how trades or investments were made afterwards, I guess, would be interesting.
Yeah, I think, AJ kind of hit on kind of a theme there in terms of, for me, different kinds of visualizations are not very meaningful for me. I'm not a visual. I think the vast majority of people are visual people, but I'm actually not that much of a visual person. I'm not against visuals, but when I see a visualization of something, sometimes it's just more confusing to me. For me, I'm actually very audio oriented, and somebody just describing something to me kind of creates my own visualization for myself. It's weird. I'm weird that way in the sense. And I remember I used to, people who know me know that I spent a lot of time, over a decade, teaching at the university level. And one of the challenges for me was that exact issue, is that I couldn't relate to the fact that I knew that the audience needed visualizations. But for me, deep down, it was like, well, why can't you just draw your own picture? Why do you need me to visualize it for you? I've described the elements to you. Why do you need me to show you a picture? You can draw your own, take out a piece of paper and a pencil and draw your own picture, right? I mean, that's kind of how I would always kind of deep down, that's kind of how I thought about it. And so, yeah. I mean, this topic is kind of different to me on that. I would note though, I think that we are we're socialized into understanding certain kinds of visual representations of things, and socialized into the way data is organized. And so I think other attempts at visualizing things in different ways, although they make like academic sense, they don't necessarily work out. And I this reminds me, I don't know if this is a reasonable connection to make, but it reminds me of how Google tried to take their Google Drive and make it a tagging system, right? And organize everything by tags, and where each item could have multiple tags on it, so that if you searched or that you used your tagging system, that was the way that you might organize your data. And I think in an academic setting, it seems like maybe a superior way to organize data rather than the old-fashioned kind of file folder, everything is only in one folder kind of relationship in terms of organization. But Google had to basically shit can their tagging system and go back to just folders, because your average person was used, in the digital age, we're still used to the analog folder concept in terms of how to organize information. And so I don't know if this really kind of is the right thing to relate to that. But when you were talking about this, Charlie, talking about it as a new visualization and a different way to see the data, it just brought that to mind, is that even if theoretically it might be a superior way to see the data, the socialization that people have of seeing the data a certain way can really be a huge roadblock to something like that catching on, I think.
Yeah, totally. And just to kind of expand on that, I think what we're kind of saying is that there's different levels to visualization, and there are some that are functional and that help you to understand the data better. And then there are some that are almost there for, they just add more confusion ultimately, or they're just not what people are used to seeing. And so, yeah, I think it makes sense and fits in well. And, if you've ever sat around and played with graphs much in Excel, you find yourself in the same scenario where you're sitting there and you get to a graph that works for your purpose, but you think, oh, it could look prettier if I do these things or whatever. And at the end of the day, you realize, okay, this one looks really cool and we've done all these things, but does it really like show the image any more meaningfully than something we had, that was simpler? And like you said, yeah, it's usually the case that simpler is better. And
yeah, absolutely. I mean, that much I do know is absolutely true, is that simplicity in our business is better in terms of always trying to reduce what you're doing, summarizing or trying to present down to the most simple presentation possible that still communicates the underlying things that need to be communicated. That's the real art of our business in terms of financial planning and presenting to executives and boards and so on.
And I think I might note, like, to all the accountants out there, because I struggle with this too. We think more is more. I think we think of, like, if we can provide more information, then we have to answer less questions, or everybody will have the information in front of them. But the problem is when you provide more information, you're providing it from an accountant's perspective, where you're thinking, okay, I understand what's going on here, and there's more information and there's more detail there, so nobody should have any questions. But quite the opposite happens, where the more information, the more questions they're going to have. And now you have a $30 cost or something on a $500 million spreadsheet, and somebody's dialing into a couple $100 in expenses, when all of that should really be rolled up and kind of presented in, like Ty said, the most simplistic way to get your point across. Because the fact of the matter is, if somebody really wants to dig into numbers and look at like the detail behind something, as an accountant, you should have that available for you. But what you should be delivering is the most succinct way you can present it, with the least amount of detail in it, so that the point is gotten across and the numbers are there and of course are correct, but you're not providing too much where people get bogged down in the details of small, minute, immaterial things to discuss, and we're able to create. You're getting across what you want to get across. Say you're delivering a result of operations, you want them to looking at the bottom line number, the broad categorization of revenues and expenses, but you don't want them arguing about splits between one department or another. You really want to drive home what you're trying to get home is the results of operations, not necessarily line item expenses. All of that should have been answered before you presented the information anyway. So I just wanted to put that out there.
I just want to say I agree with that, and I've lived the exact. This is a thing that I struggle with is being succinct. I mean, I'm sure you know if you've listened to this podcast, but I've had that exact. Even the example that you gave was exactly the problem which I've had before in the past, and so I just want to say that that is right on, and that oftentimes getting lost in the details just adds more confusion. Totally.
Yeah, and I think that, I mean, to highlight something about what you were saying there is that when you're presenting numbers or information, everything you present is inviting that audience to ask questions about it, or essentially it's basically causing, if the audience is paying attention, causing that audience to have to pay attention to that amount or understand it. You're basically presenting all this information, whatever you're presenting. That means that audience, if they're going to be engaged, theoretically is supposed to understand what you're presenting, right? And so that's really, when you think about it, that to your point, AJ, that if you do a lot of work as an accountant and you've got a lot of supporting documentation that supports your answer, and I think it's very tempting as the accountant to, like, exactly like you said, to try to preempt questions by basically providing the answer and then providing all the supporting documentation. But when you do that, you're basically, the message there to somebody is, oh, you should look at all of this, right? And so and I know from a leadership perspective, for me, when I'm serving as a CFO with a company and I'm working with an accounting team who's presenting information to me, I do exactly as you said. I want to know the supporting documentation there in case I want to audit how people came to the answer. But when I'm asking for the answer, I really don't want to see all the supporting calculations and documentation that goes into it for that exact reason. Because once you start showing that to me, that means I have to eat up my time to understand all the supporting documentation, whether I agree with that or not. And that may not be something I feel like I need to do because I trust you. Or it may be something I just don't want to do right now because I believe in the process and I think, well, okay, if I have any questions about whether this is valid or not, I can go back and audit that later, but I don't want to try to figure that out on the fly right now while you're presenting that, right? So I think that is important for, accountants to think about, is that is exactly like you said, the summarization and not being over eager to prove how you got to your answers, because unless that's being asked of you, because that just creates more responsibility and effort on the part of whoever you're presenting to.
And this is a little bit of a different point, but I just want to say I've heard the same advice for resumes as well, that people who write resumes should have it be as simple as it can be. And then if there's further details necessary, then let them request it and go from there. And so I think it's good advice and makes sense.
And I would say, as kind of like a pin in this, is that if you're an accountant and you're worried about somebody questioning the details, come up with a system that makes sure that the details are solid. And then when they ask about it and you present it in a general way, then you have all that documentation available for them to answer that question. And I think if you trust the process, then you can trust enough to summarize those numbers to be presented. And if there are any questions about the underlying, you have available to you the documentation and the process that brought you to that.
Totally. And I think it gets them more engaged when it comes in the form of a discussion, as opposed to if you say, here's what I think it is, and here's what I think you're going to ask, and here's the answer to that question. Even if that question was the same question which the person would ask, the act of them asking it and then you answering it is a little more engaging of an experience for the interpreter of that info than it would be for you to just lay out that same question and then tell them what you think the answer should be. And so, yeah, I think it just encourages discussion.
All right. This is just a shout out to our CPA candidates that are watching. So this one's from Going Concern. And so what they're talking about is how your exam score releases will look once continuous testing hits July 1st. So this is the shift in the CPA exam where they've gone from 2 months on, 1 month blackout. Because of COVID, they're going to continue continuous testing every month of the year for the rest of the year, at least for 2020. And what they've done is they've extended the expiration of your test scores until December 31st if they were expiring anytime before then for 2019. And the other thing is that they've extended your notice to schedule forward. And so I'm wondering if you guys think this is like an unfair advantage to people that are under the CPA candidate exam right now, or if you think this is a move that would probably stay and is a good move that they made.
I think it's a good move. I think I think it maybe does give people an advantage, but I mean, at the end of the day, they have to react to the reality. And I just can't imagine being somebody who's so close to being able to finish and then having coronavirus be the reason why you can't go and get your tests done. And so because I find that to be so ridiculous, then I support this whole idea. But yeah, I see your point, and I think it could be a little bit of an advantage to those who could game it, but what are you going to do?
Yeah, I mean, that sounds right to me. It seems like there's somewhat of an advantage there, but I think it would depend on the day you ask me whether I was really for it or against it. I think at this point I'd be like, okay, we got so many things going on in the world. Let some CPA exam candidates have a little bit more of an advantage. Why not?
Well, we said on the podcast before, we think the onus is on CPE and not necessarily the hurdle to getting into the. So, I mean, I think if a candidate wasn't supposed to make it, they'll weed themselves out pretty quickly with the CPE and ethic requirements, on the other end, or hopefully.
I don't think that's the case for sure. I mean,
not.
Wait till you're a CPA, then you find out that you can the ways in which you can get CPE, which are not really doing the CPE. But,
under wraps.
so yeah, I mean, I think what we said, which I still agree, is that under the ideal system, less emphasis would be put on the initiation and more would be put on continuing education. But that's not the system we live on. The continuing education is pretty easy going, and all of the emphasis and the hard work is done on the initiation process currently.
All right. Thanks for watching our podcast. Make sure you hit the subscribe button, the notification bell. Leave a comment if you disagree with anything we said. If it was good, leave us a like. If it was horrible, hit the dislike button. Thanks for watching. Catch us here next week. For all of us, thanks. Bye.
Thank you, everyone.
Thank you, everybody.
To want to feature it on next to their other products that were similar.
Should we leave this part in the pot? Is Charlie frozen too? Oh, it must be internet. AJ was frozen there for a second, but I don't. Now I can't hear you, AJ. Sounds like they can hear each other, even though I can't hear them. Now Charlie dropped off. Maybe I'll. Okie doke.